Hey guys, today we're looking at the Kroger company, ticker symbol KR, and I'll be telling you why I think Kroger is undervalued at the minute. It's currently at $35 a share, but I think this stock is very undervalued, and I'll tell you why right now. So first, looking at the 7 steps. Is the PE ratio less than the market? And the PE ratio of Kroger is a very low 10.83, so that's a pass right there. Then we want to compare it against the sector, which is consumer defensive. The average is 27.3 and Kroger is 10.83 again, so that is very low price to earnings ratio here. Now we want to see if the revenue is increasing, and Kroger has a lot of revenue and it is increasing as well, with 122 billion to 132 billion, so that's a pass there. Now, is the profit increasing? And the profit has gone from just under 1.9 billion to just under 2.6 billion, so that's another pass there. And are Kroger buying back their shares? The answer is yes. It has gone from 895 million to 799 million, so that's another check. 4 checks off the start. 5 checks off the start, sorry. It's 5 out of 5. Just want to thank you guys for watching. Please leave a like in the video. I'm trying to get to 45 likes this video, so help me get there and I'll release a new video. And now on to my next step. Are the current assets greater than the current liabilities? As you can see, the current assets of Kroger are 12.5 billion, whereas the current liabilities are 15.4 billion. So that is the first fail. It's not the end of the world. I think they can almost pass it. You can see the numbers are pretty in line. Current assets have been increasing at a pretty good rate, whereas the current liabilities have increased slightly. So I think in a couple of years, this will eventually pass, but right now it is a fail. And at the total liabilities, they can pay off around about a third. And finally, the best part I would say is the free cash flow increasing, and the free cash flow has gone from 604 million to just under 4 billion, so that has increased massively, so there's a check mark there. That gives an average free cash flow of these years of 1.8 billion, but I'm going to look at the most recent number, which is 4, and that gives a free cash flow yield of 8.86% and a free cash flow ratio of 11.29, so those are great numbers here. I think this stock is very undervalued based on the free cash flow analysis. Comparing it to something like Walmart, that had a free cash flow yield of 3.5% and a ratio of 24, so that was almost twice as expensive. Now looking at the dividend, Kroger does pay a dividend, and it has an annual dividend of 72 cents a share, which is a 2.03% yield. And looking at the payout ratios, it's a very safe dividend with 32% of the earnings, whereas 10% of the free cash flow. It has 14 years of consecutive dividend growth, which is really promising, and as you can see from this chart here, they do tend to pay out special dividends, so buy now if you want to get the dividend. Earnings per share, Kroger has consistently beat earnings per share, and the estimate is 0.98, and looking at that, they're probably going to be in the 105, 110 range. Yahoo Finance analysts have it mostly at a hold, with people leaning towards buy, so they have it at a 2.7 on the rating, and the target prices are ranging from anywhere between an average of $35 a share, which is just below its current price, but a high side of 42. But I don't think these analysts are right. I'm going to look over to Simply Wall Street here. Simply Wall Street would have it 50% undervalued with a fair value of 71.73. So Simply Wall Street are very bullish on Kroger, and I believe that's for the free cash flow, as they use a discounted free cash flow model. But if we head over my calculations, I have a discounted free cash flow model here and a Buffer-Graham intrinsic value, and I have calculated the future free cash flows. I've kept them in line with the prior year. I've took 2020 as a bit of an anomaly, as it was 4 billion, so that gives a calculated stock price of $68 a share, which means it's at a 92% discount. Also looking at the Buffer-Graham model, that has a fair value of $46, which is a buy, and a Graham price of just under the current price right now with 34.5. So the Graham price would say if you want to buy the stock and hold it for 20 years, this is the price you would buy it at. So I think both of these models are showing Kroger as a buy, and it's criminally undervalued at the minute. So just going to quickly bring up the technicals here. I have Kroger in dark blue, the 50-day moving average in light blue, and the 200-day in gold. So the things that I'm immediately looking at now recently is that there is a golden cross here just in March on the 10th, which would signal that is a buy, as the 50-day has crossed the 200-day moving average, and it looks like these are diverging as well. So around about March would have been the best time to buy this based on the technicals, because there's a lot of very bullish signals with the price crossing both averages here in early March and the golden cross here. So looking at the technicals more recently, it is a buy. Right guys, I want to thank you all for watching. Please leave a like if you enjoyed the video, give a comment on your thoughts on Kroger and what stock you want me to do next, and consider subscribing for more stock analysis videos. Catch you guys next time.